Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week, and a look at what might happen in the coming week. And we hope great opportunities for you throughout the show. Well, there are some weeks in a person's trading career that they don't forget. I can remember very clearly a crash in 1978, the crash of 87, the horrible day of 9/11, and the day of the Brexit. That is today, and the markets moved in a big way. It started out with the week being fairly calm, actually, as optimism grew throughout the week, and the polls were starting to show that things were pretty close, maybe even favoring that the UK would stay in the EU. And then on on Thursday, it was just like massive buying going on, as there was absolutely no doubt in people's mind, based on the fact that the bookies are never wrong, that the Brexit would fail. In other words, they would vote to stay. And then the news started to leak out after the vote that certain districts that should have been heavily in favor of them staying actually were very close, and they started to get worried, and the market started to get sold. And before you know it, the news was really coming out, and the futures markets just moved in a giant way. S&Ps fell as much as 100 points. Some of the moves were just incredible. The pound moved to a 31-year low at one point, down about 10%. It did bounce back from that, but still massively down. And the news that came out shortly after was that Prime Minister Cameron, who had promised if the vote was to leave that he would stay and help them work through it, then immediately resigned, saying that that Britain needed new leadership. There are all kinds of fear now, as the fact that the Britain is leaving is potentially going to start a domino effect, and that maybe the voice of the people is going to be not only heard loud in Great Britain, but also across other countries of the EU, and potentially here in the United States. The stocks that could get hurt in this situation essentially got absolutely nailed, especially the financials. The financials have what's called a passport in the EU, which means that they can sell their services across the 26 countries, and that for Great Britain depends on how that's going to get renegotiated, but that would be over for them. And there's a lot of talk about financial companies needing to now move their headquarters, fire people, move to Brussels, move to France, other places, and talking about the potential for large declines in London real estate of maybe 20% is the speculation. So there are other repercussions also, tons of them. Scotland, that voted 62% to stay, says now they probably have to hold a referendum about actually leaving the UK, right? Because they want to stay in the EU, and mean a breakup? What about Ireland? What about Wales? There is lots of other repercussions in here. So now it's potentially a long process. The Article 50 is what will probably get activated by Britain, that essentially gives them 2 years to negotiate, the new trade deals, the immigration rules, all the regulations about how they're going to do business, how all the companies are going to do business. It's going to be a long process, and that is probably going to mean repercussions for the UK, for the EU, for a long period of time. I gotta tell you, I applaud the people who voted yes to this, who voted to leave. People taking back control from the governments that just are oppressive, and the control from the central banks that are oppressive, and that just randomly can print money or misprice the financial instruments. And it's time that people are stepping up and saying, let's take the medicine. We've got a cancer growing in here. And they would rather do that than be that concerned about what the repercussions are. And maybe that's why Donald Trump is electable in this country, because the people want it to be different. No more central banks that are dominating the economy, that cause huge swings. We doubt certainly that the Democrats are going to change that at all. So maybe that's why Donald Trump is electable in this country. Anyway, the people speak, and the central banks, they're going to be scrambling in here because they have nothing left. Really, what can they do? The old print the money and throw it out of helicopters. That's it. What are they going to do? Go to negative interest rates in countries that there is huge anti-sentiment to that happening, and it's extremely negative. And I'm actually working on a piece to talk about how bad it is to have negative interest rates for the economies. Anyway, the stock market fell hard, rebounded back, and now as I'm doing this show, is towards the end of the day, is falling hard again. S&Ps, which had been down 100, rallied back to down about 45, and now down 80 as I speak. So markets really weak. Eurozone, they average down about 6% on the day, though the FTSE only down about 3% on the day. That's really a surprise, isn't it? That one I think has got more to fall yet. Japan gets whacked, down 8% on the day, the worst in 5 years. Now, the panic hit and the markets really moved. The flight to safety happened. 30-year bonds up more than $5, incredible. And now up about $4, so they gave back just 1 point of that move, but just a huge flight to safety. Gold at one point moves to $13.62. That was up like $100 or something like that. It was a massive move in this flight to safety. The dollar just soared. It was up at 1.3.5%, though it gave up a lot of that, about half of that gain. The euro, a big decline. We're going to talk about the euro and gold, of course, in the short-term view. And I actually think that the euro, which had a big rebound today, is still going to be in some trouble. We're going to talk about that also. The big gains in the yen, also a flight to safety. It gave up half the gains, still gaining about 3%. So just tons of fear out there, tons of movement to flight to safety. And that is a market that's going to give us a lot of movement, a lot of volatility, probably a trader's dream, and investor's nightmare. A big picture for the stock market likely changed pretty significantly, and I'm going to do one of those big picture videos pretty soon on the stock market. I was waiting for the Brexit to happen before I did that. U.S. Stocks down right now as we speak. The Dow sitting down about 500, 600 make that. And it was the Dow was up 400 for the week before that. So, down 200, 250 for the week. It's not all that bad, right? Well, it might still get bad. Let's take a look at what happened to this market throughout the week as we look at our 60-minute chart of ES, the gray area being the area of overnight trading, and the white area is the trading during the trading session. And we have our notes in here of what had influenced the market. Monday, if you look at Monday to Thursday, it just kind of, Monday to Wednesday just kind of moved sideways, right? Got a little bit of gains in here, and then on Thursday they just accelerated up, and you could see this news on the Brexit as there was a total collapse. They were really screaming them, right after the close. On Thursday, again, E-mini S&Ps were up $10, trading up near 2120, and then you could see all the way down over here under 2,000. So that was something like a 120-point drop in there. Monday, the polls were leaning to remain. Eurozone was up 3.7%, Japan up 2.3%. The dollar was moving to the downside. Bonds and gold were falling. Everything was okay, right? Even though the stock market gave up its gains in there. On Tuesday, the sideways move. Yellen addressed Congress in that semi-annual, what used to be called Humphrey Hawkins. Shows you how old I am. And the messages that she gave were totally convoluted, confusion, slow growth, low growth, way of life. Expects a 2% inflation, which they've been saying forever, but she's concerned about real estate and, of course, about the Brexit, and markets traded in a tight range. Same thing for Wednesday, tight range in here. And the world markets basically were higher. They were very quiet ahead of that vote. Tesla news comes out right over here. We're going to talk about Tesla in the worst of the week as the stock falls as they plan to buy Solar City, huge losing company. And Yellen says that she expects, in her part two of Humphrey Hawkins, as she addresses Congress, she expects economic rebound, wage growth, but she does talk about permanent changes out there that may mean that growth is slower, that the job creation is worse. And if she only knew about the Brexit then, right? Then on Thursday, the stock market jumps ahead of the Brexit. Polls showed it close. Bookies said they stay. Eurozone up 2%. Asia up small. U.S. futures up 20%, 20 points early. And just continue until that vote starts to come out. Here comes Friday. Brexit comes. Leave wins. Massive moves in all the market, and still down for the FTSE, only 3%, which is like crazy. I think they're going to sell it some more. And all of these big moves in the dollar and silver and bonds, just big, massive moves in there. And stocks that have exposure in the EU, they just get cratered. Barclays, other banks out there that are EU banks, down 20%, 25%. Oil drops 4% on the day and barely recovers, and in fact down 5% late in the day. And seemingly meaningless for a day like today, the durable goods orders, they are down 2.2, which is much weaker than expected. Actually, Thursday news came out that new housing starts were weak also. So economics are certainly not that strong. And now with what may be a economic political upheaval beginning here in the world, starting in the UK, things certainly could be very different looking than they have been, and maybe it is time. We probably will look back in history at this day as a day that started a trend where the people spoke and things started to change. And I got to tell you, it's painful, but it's going to be good news. Here is our economic and earnings calendar for the coming week, and here is what is another week of very few earnings reports. After the close on Tuesday is Nike. On Wednesday before the opening, GIS, that's General Mills, and Monsanto, which is a stock that's getting taken over, so no big deal. Conagra, Darden, Schnitzer on Thursday before the opening, and Micron after the close, and we're going to look at that Micron chart in just a couple of moments. As far as the economic events goes, not a whole lot other than the fact that on Wednesday, Janet Yellen is going to speak again. Not exactly sure what the topic is going to be for that, but you got to believe that Brexit is going to be on her mind and the repercussions of such. And that probably has a chance to be the most market-moving event of the entire week. So that is our earnings and economic calendar. And that is the opening segment for the week. We're going to be right back and take a look at the best and the worst stocks for the week. Be right back. All right, best of the week. With all of this, thrashing that's been going on in the market this week, big rise all the way through Thursday, and then, the giant drop on Friday. Overall, there weren't that many big net changes, except Friday. There was a lot of things that were down huge, but they had been up a lot during the week also, so not that much to really talk about here in net changes. Marathon Oil, that was up 9%. They buy Paypack Energy and comes up to some resistance area. This is a major bottom, I think, being formed in this stock, and some of these other stocks in this category similarly, but here you could see this has got our colored phasing in it, and what that tells you is that the rising phases, that's these phases right in here, those are green. The corrective phases in yellow, and the red phases are bearish phases. So we've been in this long rise right here, you can see that, and it's up against this resistance number right over there, and it's been stalling there several weeks. So it pops on this, buying this Paypack company, but at this resistance, we're looking for a few weeks down in the oil market too, and that's come nicely. We'll talk about that in the short-term view, and then we're looking for another pop in here. So overall, this is a really good pattern. We just think it's at resistance right now and getting ready to turn over for a very modest correction. Micron MU, that stock up 11% on the week, nice gain, and that one gets some analyst upgrades in there, and you could see, let me get rid of that, that this rally phase right in here, similar to what we see in MRO, is going a long period of time. So we think this is a big base being formed. There's also a smaller cyclical pattern in there. You can see how nicely it followed that right in here, right? And they're both getting into this corrective period. So we're kind of thinking that we're going to see some pullback here in Micron, also MU. So that stock, we'll just say, it's kind of come far enough for now, and we're going to just wait for a better opportunity to buy it. Probably somewhere around the $12 area is what we're looking for in here. GoPro, GPRO, not one we talk about all that much. Analysts were pretty bullish in this stock. Let's get a closer look, as this one's up 10% on the week, even after giving up a little bit of ground. Now, that is not that much when you look at this stock as far as the number of points that it's moved, and moving up and up here against this 13-week moving average. Let's take a look here at the daily chart in GoPro, and you will see in here that it's moved up right to that 89-a-day moving average. That's a place where we kind of think that it's going to struggle. So it's gotten some upside momentum in here, but everything has got downside gaps today, and we really think that this one does not have much more on the upside. So analysts upgrade it. We don't like it at all. One more we're going to look at in here is Yelp, YELP. Talk about not liking a stock. This one in here, we actually think is crazy how much it's come up. It's come up from 14.5 up to very close to 30. So it's been a double. And it's really moving on the coattails of LinkedIn since Microsoft is buying LinkedIn. And we think that they're completely wrong. And you can see in here the downward cyclical rhythm, the stair-step pattern. Note this key lows right over here. You can see where the lows are nested right here. And preceding each of those nested lows came what? Well, big declines. You could see it there and there and there. And that's where we are right in here. We think Yelp is just total junk, and I can't imagine it's going to go much further unless somebody comes along and pays some ridiculous amount of money for this company. We think the next 6 weeks in here could be a lot of trouble for Yelp. So this is a stock up 7% on the week, and this is a stock that we actually really love to hate at the moment. KB Home up about 5%. Analysts have upgraded that stock. I like the other home builders better. This one popped on that news. The other one's getting hit pretty hard down to some support levels. So Toll, Pulte Home, Lennar, I think those are better buys than KB Home. One more stock to mention, Solar City. That should have been on our best of the week because Tesla's stepping up and buying them. It's essentially a rescue program for a company that is bleeding massive amount of money, like $2.5 billion in the last year. And Tesla, of course, is related to that company. His cousin, and Musk is a big shareholder. So it's essentially a rescue deal, and we're going to talk about that. Solar City was up 10% early in the week. It gave it all back. Really interesting. But Tesla, which got hammered, didn't make any ground back at all. And we're going to talk about that in our worst of the week coming right up. Worst of the week, Brexit is here, and that has the markets afraid, has investors afraid as they've moved into safe havens and have really bludgeoned stocks on Friday. I mean, this is one of the biggest down days that I can remember in a long period of time. And let's say that the stocks that could be very greatly affected, those that, well, don't like the companies that don't do well under a strong dollar environment, or of course under economic slowing. And if Brexit is just the beginning of a domino effect, which there's not that many people that are afraid of that right now, but there are some other countries out there that you're hearing winds of other referendums, and that really could continue to put pressure on these markets. So the companies that do well in the banking companies, the financial companies in Europe, they have gotten absolutely hammered. The banks are really weak here today, but economic slowdown, people being afraid, it's steels and materials and energies, and because oil down pretty sharply today. That doesn't really tell the story for the worst of the week, similarly to what we saw in the best of the week, because the market did well early on. So there's very few stocks that had overall really big moves for the week. The one that we mentioned in the last segment that we're going to lead off with here, the biggest decliner of my 330 stocks I look at, Tesla, down 11% on this crazy buyout. I can't even imagine why they would want to buy a company that loses $9 a year in earnings. How is that going to benefit them? Do they need to have that kind of a poorly run company be the one that they're going to get solar panels from for expanding their business? It's just, the investors are like, what happened here? And here's the chart in here in Tesla. This is a great example of our cycle analysis. And of course, if you don't get our charts, well, you could be much more well informed based on the information that's on these charts. You can see on here the cycle brackets right down over here. The lows or the troughs in the cycles point to important places where the markets decline into. We have usually two or three different cycles on there. When they're nested together, you get sell-offs. So you see the sell-off right in here and the sell-off right in here, and look what's going on right in here. So I don't know. Maybe the cycle just said that, Elon Musk, this is the time to make a stupid investment. And the stock comes right down over here to this support level right there. That's the 618. Here's the 78.6 right here. And this is the period we expected the decline into. Now, I didn't really expect it to get down under, down close to the 190 level. But the combination of the negative market and this negatively accepted buyout of Solar City, that is what's really pushing the stock down. I suppose if there were a market panic, it could get all the way down to 168. We're in this window of time, in this next, let's call it 2 or 3 weeks or so, where we expect that this stock will find an important low and then move up again. After all, they've got that magnificent new car coming out with 300,000 plus orders for it right now. So that is going to give this stock a boost again at some time. The thing is to ask is, when exactly do we want to buy it? Based on the shorter term pattern that we see in here on this daily chart, this low in here came pretty much on time. That's one right over here. It came a few days early. And then we got the rally right into that resistance, and now you could see it's just fallen off right here. We see the support, the time frame in here for a little short term in the next few days. So we guess by midweek this is going to make a temporary bottom, and that's what we have projected in here. You could see that. And then try to get some kind of a rally. But then out over here, we see it rolling over again. So this is overall not a great pattern. We would like to see some better indication of bottoming in there, and it doesn't quite look like we're there right now. So crazy stuff going on right in here, and we're just going to wait for the stock to talk to us and tell us that it's about to make a bottom. So it's got a little more time, maybe some number of weeks before it makes this bottom in here. You want those charts, level 4, and you can get them on your TOS platform. Easy enough to get a TOS account if you don't have one. All right, so the next one we're going to talk about is WIL, W-L-L, WIL Petroleum, down 9% on the week. They're exchanging some old notes for some new convertibles, and that's weighing on the stock. I like this stock. I really do. The stock took a lot of heat over the last couple years. I mean, talk about a lot of heat. It falls from $93 all the way down to $3. I would say that was giving up a lot of ground. And now it's building a major base. So here you could see that high way up over here at $93. And what I want to do now is talk about the base that's forming. So you see the long decline in here. You get a rally up. It moves up above that 34-week moving average. Now it's coming down to it right now. Long base being formed in here. Only a little time to decline, maybe a month. That's in line with what we see in oil, a few weeks or a month on the downside. And then we think this stock is going to pop again. So we're going to wait for a good bottom to form in here. This is, similar to Tesla. You got to be a little patient, let the market tell you when it's done. And we think there's still going to be pressure on the oil stocks. We think that this one has a little bit of time. And you can probably buy this one down around, we're going to guess $9 or something like that. It's trading $9.84 right now. I'd feel pretty good about that in the next couple weeks. I think it's a very investable stock. The steel's getting hammered today. And for the week, we have U.S. Steel, Steel Dynamics, Schnitzer all down 6%, and AK Steel down 10% on the week. Here's the U.S. Steel chart. We have a colored phasing in this one also. It's in a green rising phase. I don't like the engulfing pattern in here. It's opened higher on the week and closing way below that body on the week. That says it's going to have a lot of trouble getting up past that $19 area. We wouldn't be surprised to see it kind of backing and filling in here when we look at that. Here's the daily chart. Of course, this is on our rankings and setups and focus list, so it has a lot of daily analysis on there. And this is a key area. You see, it's coming down to the minor support zone and the 89-day moving average. Look what happened last time it did that. It just got barely below support right there, and then had a very nice rally from 13 and a fraction up to almost 19. So this is an important spot. We think we're going to get a bounce from there in U.S. Steel. It's a bad week for the group, and of course, the Brexit is really got people scared about economic growth and industrial trade throughout Europe. So they're worried, and okay, so I think this is coming to an area where short-term traders can buy it. FDX, we're going to look at that one right in here. This one has been in a yellow corrective zone. Look at the key area here now as it gets just below that 34-week moving average, right on the support right over here. We had really targeted it to do something like this, and this you could see our cycle pattern in here. So we think potentially another week maybe of fooling around here, but then we could probably get some rallies out of this area. So it's about to enter into one of these green rising zones, but it's going to take a little work in here probably to make that bottom. So analysts basically, earnings came out on this stock and their outlook was, well, questionable, and analysts were making noise that the fact that fuel prices are low is masking what may be some core issues in their business. We talked about this one on one of our other videos during the week, in that because of this island, we would be a seller if any attempted rally came out of these areas. So it has this big downtick today. We think if it tries to rally up in here on a rebound, that it actually, for short-term traders, would be a nice short sale because this island says to us it can't get a lot of upside ground right now. So this is really the support zone right over here. The slim ribbon creates a resistance right around that 89-day moving average. So somewhere up around 58 or so would be just a beautiful opportunity for a short-term short sale. So that's Federal Express, and we think it's got a little more work to do and a lot of chop down in this area before it's investable at all. So I'd rather short it on an uptick than anything right now. Netflix, the last one we're going to look at in here. Analysts have been talking about this one also, down 6% on the week. They're talking about if they try to raise their prices again, they could lose hundreds of thousands of subscribers. So they're really cautioning against that. There's also the Brexit fears that it'll slow down for them in the UK or in the EU, and their content creation is slowing, and their costs are rising. That's maybe why it's fallen from 133 all the way down to 88. Our patterns suggest that this stock declines into July, August, and you could see it was a resistance area right at that 34-week moving average in that resistance zone, and just absolutely nailed it and turned straight south from there. Support right now on the fib extension right at about just below 80. Is the next one. The first one around this 86 level where it stopped before. So, we're looking for a decline probably to about $80 in Netflix over the next maybe a couple of months. So this has still got some weakness in here in Netflix. And again, if I think it tried to pick up its head, we would be a seller in there. That's it for our worst of the week. And we'll be right back with our short-term view of the coming week. All right, short-term view for the coming week. And before we get into that, don't forget, go to our website, look at all of our memberships. We've got amazing offerings there, and really want to raise your probability of success as a trader, so go to askSlim.com. All right, last week when we did our short-term view, we said that come Friday, we had no idea because we thought there was going to be a big move after the Brexit vote, and before that, we pretty much had it pretty nailed as to where the movement was going to be. We're going to give ourselves up till Thursday Our close of Thursday about 75-80% as far as how the patterns went, and we always do that every week. The previous 2 weeks we were more like about 45%. So this was a better week, and patterns really started to shape up. And then came the Brexit vote, and now craziness when we look at these charts because the moves were so big. So let's talk about each one, what we looked at last week, what we expected, and what we think is coming for the next week. Always want to be accountable to what we said in the previous week. So we're going to start out with light crude and then go to gold, the euro, the bond market, and the S&P 500. So here is light crude. So what we had expected was last week it would rally and then fail. So we thought it would get up to like 49.50. Here's the rally right in here. It's following this pattern right here. And that is, pretty much on target with what we expected. And then we thought it would roll over following this like 8-9 day period that you see right in here. And here you could see the head and shoulders top that's formed in there. That's these cycles in here that are making that head and shoulders top right there. And right now, well, we are in day 6. So that says to us a couple of more days on the downside in here. You probably complete this head and shoulders look in here and then try to bounce before it then rolls over again to further the correction. We're going to look for a test in here before it bounces of supports around the 46.50 right there that it got down to this morning, that low right there, down to potentially about 45.50. So only 2-3 days of time in here where we expect this to decline into midweek and then get a bounce. So that is a look at the light crude market, and we think if it tries to rally on Monday that it's going to be a great sale. The gold market is the next one we're going to look at, /GC. And this had this just crazy move in here. Note that this was really pretty magnificent. We were looking for, you see this period of nested lows right in here, silver low, gold low, GDX low. We were looking for a decline in this period because of it. It nails the 89-day moving average just below that 50% number. We called for it to get down to about 1260 and then rally up to about 1310. That was the range we called for the week. Of course, it blows all the way up to 1362 because of the Brexit. And now people are scared. And I think that this being the first day up of these patterns, that it's going to be hard for the gold market to sell off. And, I'm going to show you that I still think that there's some, trouble for the stock market in here. And that is going to probably keep some bids in here. So you can see it's really funny to see the minor support sitting right here in the middle of this bar. But that's based on the movement that we see in here right now. So the support level that we see is in this 1295 to 1310 area. We could see it trying to get down into that area, but man, I think for short-term traders, that's the buy zone right in there if it tries to get down there. We think it'll try to rally again this week up into this resistance zone, and that's our range we call for the week. We'll call it like 1300, 1295 up to about 1347 up over here is really where the resistance is. So that's the resistance zone that we really expect it to trade back up into. That's not that far, right? It's only like 24 points. So that's the kind of the range that we think it'll be in. We really want to buy it here under 1300 or around 1300. I think that would be a really nice opportunity, and we're going to call it a choppy week in here in that range, 1295, 1347. Euro currency, /6E. This is, of course, not only a proxy for the dollar, but also now they're scared about the euro zone. This just being the beginning of the deterioration and the coming apart. Man, if you heard Greenspan on TV today, he was talking about how ugly the scenario is for the euro, for the eurozone. And this, see the head and shoulders on there? That is troubling right now. look at how high it traded up here before the news came out, and just absolutely collapses. The range in here for the day is incredible, with the high being up around 114.50 and the low being 109.47. So a 5 penny range here in the euro currency. That is incredible. So we actually put out a late trade setup in the euro today. When we saw it bounce up into this resistance zone, man, did that alert us that it was time to do something. So those of us that get our level 3 and level 4 memberships, you can you would see what we put out. By the way, if you want to see how we've been doing on that, we have a new marquee with the results going across the main page of the website, so you'll be able to see that. Of how our setups have been doing. That was an area we expected it to fail from, and man, it was already doing that. So we think that the euro currency is going to be in a range this week, getting down into this minor support. We'll call that 110. 40-ish on the downside to 110.70. That's the support zone right in there. And this resistance, short-term resistance zone, right around 112 up to about 112.60. If it bounces up into there, I'm going to be selling it like crazy. I just think that that would be the gift. And I've already sold it when it bounced back up towards that zone in here today. So we expect to see that range for the week in between that support and resistance. We based on this cycle in here, you see it looks like it's going to be down early in the week. You can see that, and then it looks like a midweek or so is when it likely is going to turn up and maybe try to test that area. But then we think it'll roll over again. Notice how I'm following that cycle pattern right in here. So the euro, I think it's got lots of trouble in here, and we would really want to sell anytime it tried to tick up into those resistance zones. Let's take a look at the bond market /ZN, and take a look here at the daily chart as we're doing in all of them. So last week we thought it would be this, kind of a V pattern where it went down and hit a target of around 130, 110, and then rallied. And we were real clear, we just did not know what the Brexit would be, but we thought if they voted to leave, it would be a big rally, and if they voted to stay, it would be a big sell-off. And you could see gets right down, practically nails our target in here, and then explodes on the upside. So right now, this is in a support area already. It's given up all this ground right over here. We think this is actually a buy area, and that if it gets down to 132 area, that is probably a buy, and we'll see it trade back up here into the 133. So this is a support, minor support that it's in right now, after having pulled back from 134.07 all the way down 2 full points it gave up, and we think it's going to go back up into that resistance area in the early part of the week, and that's probably related to the fact that the stock market still has more risk, and we think that there's risk in the stock market through the first half of the next of this coming week. We're going to take a look at the S&P 500 SPX and the amazing repeating pattern that we have identified in there that's been going on for quite a bit. And we were thinking that the stock market could move up to test the all-time high, 2134, maybe to 2140, where the top of the resistance zone is. The odds of that are sharply diminished right now. The fact that this bar right over here, as we fell some 80 points, has gotten below this level right over here, that's number one warning. If we get below this level over here, that's around 2026, that is going to be a horrible occurrence based on the weekly patterns, intermediate patterns. So those are, what's happened is really bad. And if the market was going to be able to hold up based on the Brexit news and just stand up on its own, it wouldn't have fallen so hard, and it means that there's weakness out there. So the fact that it got up here and failed and got up there close again and failed, that is a bad sign. So what are we looking for now? Well, we're looking for this repeating cycle that we see in here. That's this smaller one down in here. And you could see the rhythmic motion right in here. That's essentially a guide to us. That's a half cycle of the bigger cycle. Here's the bigger cycle right in here. You could see that right there and right in here. So what that says is that this turned down really early. This is day 6 off of this last low. So we expect the next 2 or 3 days to have some more weakness in here. If the market tries to rally, we think it will get sold again. That's right in here. Then it will try to bounce, but we think that the problems are there and that we're looking for more downside further out. That's a little bigger picture. Right now, what we're calling for the next week is that we go down probably sometime into midweek, probably break this low here at 2026, give us a major top signal, try to rally after that, and that's what we'll call for the week, kind of this V pattern. Remember, for the bonds, we said up and then down. That's the opposite in here. It's down and then up, and that's kind of what we see here for the coming week. And we think that if we're right and we get that sell-off early part of the week, and then it rebounds, that's going to be a really great selling opportunity. And we're going to do a big picture analysis pretty soon, like I said, and it's going to have a lot more negative slant to it than the last one that I did. This market failed from a key area, and the stock market and stock markets just have a lot of trouble. So that is it. That is our Market Week show. Short-term view, best and worst of the week, all the commentary, all of that, everything just for the purpose of raising your probability of success, for having a better sense about the markets and how they work together, and to be as well informed as hopefully we can have you be based on us sharing our knowledge. That's it for Market Week. We hope you have a great weekend, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a stage show.